New year, new you, new house. If you're thinking about buying a home in 2023, there are gonna be some things that you're gonna need to take care of and set up well before you ever pull the trigger on buying a new home. Because as you know, buying a home is a process, not an event. So in today's video, I'm gonna tell you about the things that you can mark on now to get ready to buy your next house in 2023. Just in case we haven't met before, my name is Shaun. I'm a local real estate agent in the South Carolina Midlands, serving Lexington and Richland counties of South Carolina. Now that we're through the pleasantries, let's go ahead and get into the steps that you're gonna need to take in order to buy a home in 2023. And step number one is gonna be kind of obvious. It's gonna be save your money. I can't tell you how many buyers I've worked with in the past, even if they are a VA buyer who doesn't have to have any down payment, who don't realize that it does take money to buy a house. Now sure, there are no down payment and low down payment programs out there, but they're super hard to qualify. So the question becomes, how much money should you save to buy a house? It can be a good rule of thumb to have around 5 to 10% of a home's value saved for your down payment, for your closing costs, for your attorney's fees, and for your inspection. If you're getting an FHA loan, which is a first-time homebuyer's loan, they require a minimum of 3% down on top of all of those other fees. A VA loan, which for military, requires no money down as a down payment, but you are still gonna have attorney's fees and lender's fees and title searches and inspections that you're gonna have to pay for. And then a conventional loan, which is what most people get, require right around a 5% down, as well as all those additional fees. So if you're looking for a good rule of thumb, if you're planning on buying a house in 2023, you're gonna wanna have around 5 to 10% of that home's value saved in order to do that. Now it's also good if you can save more than that. That can be a good thing. If you can get to that 20% down payment, it's also gonna save you on what's called PMI, or private mortgage insurance. That's basically insurance that you have to pay for the bank. That if you don't pay your mortgage, it's insurance for the bank that they can take that. So if you can get to that 20%, even better. But if not, you should be safe with around 5 to 10% down. The next thing you're gonna wanna take a look at is improving your credit score. You can always jump on Credit Karma or another program like that to take a look at what you can do to improve your credit score. Now, I don't recommend that you sign up for any of their programs or anything like that, but stuff like paying down your credit cards and lowering how much debt you owe can go a long way to improving your credit score. And if you're renting right now, I recommend checking out the website ColumbiaRentalCredit.com, because they can actually, you pay like $40 and you can request that your landlord start reporting your rent payments to your credit, and they can go back as far as 2 years. So this can be really strong in bumping up your credit score as well. As far as recommended credit, you're gonna wanna have at least a 580 in order to buy a house. As far as the type of credit you're gonna need, you're probably gonna need right around a 580 or better in order to buy a house. Now, obviously, the better the credit score, the better off you'll be, because the less you're gonna pay in interest and fees and things like that. But a 580 is really the minimum, and that's even hard to do. You're actually probably be safer having around a 620 or better. But the only way to be sure that your credit is good enough to buy a house is by speaking to a lender. And that's one of the steps that we're gonna talk about a little bit later in this video. Now, the next step in the process is for you to set a realistic housing budget. Now, most people go about this the wrong way. They think about the total cost of the house. I'm gonna buy a $200,000 or $300,000 house, but they have no idea how much that's gonna cost them on a monthly basis, and really, they're just guessing. What you wanna do is take a look at your current budget. How much money can you afford to spend on a house on a monthly basis? And then you can take that number to your lender, and they can help you figure out how much home you can afford for that price. Now, I do wanna remind you to be realistic. I spoke to a buyer a couple of days ago who told me they were looking for a 4-bedroom home. It was a 5-bedroom home, 3-bathroom home, and they only wanted to spend $110,000. Unfortunately, that's not realistic. In Columbia, South Carolina, the average home price is right around $325,000. And that's just for a normal middle-of-the-road home. And you may be watching this from somewhere outside of Columbia, South Carolina, and chances are homes are gonna be more expensive where you are, because this area actually is 24% cheaper than the national average. So take a look at what the average home price in your area where you wanna live is, so that you can set a realistic budget and expectation. The next thing for you to do is create your list of must-haves and like-to-haves. This is gonna be very helpful whenever you decide to start talking to a real estate agent. Figure out what are the things that are required. And in this area, that might be how many bedrooms, how many bathrooms, how much space do you need? And be realistic with this as well. What is a need? What is something that you absolutely have to have? And what's something that you would like to have? This is gonna come in handy later when you know what you're willing to give up to get into a realistic home at a realistic price and what you're willing to pay a little extra for. The next step in the process is to find a real estate agent that you connect with and you can trust. If you're in the South Carolina Midlands, I would love to represent you and help you find your next home. So I put a link down in the description for a free, no pressure call with us. It's called a moving strategy call, just to figure out where you are at in the home buying process and see if we can help you or not. And if you're not in the South Carolina Midlands, we actually have a network of agents across the country and honestly all over the world that I'd be happy to put you in touch with in your specific market. So if that's something that you would find valuable, go ahead and click the link in the description to set up that free strategy call. The next step for you, if you're getting ready to buy a home, is to get your pre-approval done. Even if you're not moving for, 6 months, 9 months, a year, I encourage you to go ahead and speak with a lender, and not just any lender. I encourage you to talk with the real estate agent that you found and get their recommended lenders list. They should be able to provide you with 2 or 3 lenders that they've done business with in the past. Most buyers make the mistake of just going to the bank that they bank with and applying for a loan. And a lot of times those don't have the best terms or the best rates, or they go to one of these big banks that they saw an advertisement for on YouTube or Facebook or wherever and just go there. I encourage you not to do that. Speak with your agent first. If you have already gotten a pre-approval from your local bank or some, big bank, wherever, I'd still would talk to your agent about who they recommend, because as long as you get your credit pulled within a certain time period, I think it's 30 days, maybe it's 90 days, it all counts as one credit pull, so it's not gonna damage your credit by shopping around for the best rate and the best deals. With that pre-approval in hand, that's also gonna be the letter that tells you exactly how much the bank thinks that you can afford to buy a home and what your approximate interest rate's gonna be at that time. You can then take that number and compare it to your monthly budget to see how much home can you afford with the interest rate that you're expected to pay, so that you can set that realistic budget for your agent. And that's gonna make the home buying process a lot easier for you, as well as a lot easier for your real estate agent. Once you have that pre-approval in hand, you know how much you wanna spend, you've got your real estate agent that you're working with, you know what your needs are and what your wants are, you know your credit score is good, and you know you've got your money saved for your inspections and your down payment, you are now ready to move forward with buying a house. Again, if you're interested in using us to help find your next home, I put that link down in the description. And if you enjoyed this video, YouTube thinks you're gonna enjoy this video next.